Hello, everyone. Welcome to another segment of Come Fly With Us, inside information about insurance. And we're back here with Cody Gladney. Cody, man, how's it going?
Pretty good. How are you?
It's been a whirlwind.
It has been
after the
crazy.
snow apocalypse that we had. I know we've all had some pretty crazy stuff happening, and it's been really intense for some people, right?
Interesting time in the insurance world, if not just the world period.
Yeah,
right?
for sure, for sure. So we're back again talking about different topics, and one of the ones that I've got that actually is not really a question that it's come from any. Well, it has come from a buyer, but mostly it's coming from mortgage officers, and there's a little confusion out there sometimes still. And the question is, can my lender force me to insure my new home purchase to the loan amount? We get that all the time, and you get it too. Hey, we need you to change the dwelling amount to match the loan amount. So there's a short answer, and then we have the actual answer from the Consumer Bill of Rights, right? Yeah. So let's go over those two first.
Yeah.
And let everybody know what's going on with that.
So the short answer to that is no. The lender cannot force you to cover the loan amount on your home. Just think about it like this. Somebody who's buying a gigantic ranch,
right,
that is like a $2 million ranch, but they've got about a 1,500 square foot home on it. Obviously, the loan amount's going to be really large on something like that if somebody doesn't put down a large down payment.
Sure.
But in order to replace that house, if something were to happen to it, it's not going to cost $2 million for the most part. I mean, unless it's a really nice house, which is possible, right? But so that's typically why those numbers don't always match up. What insurance companies are trying to do is insure the home for what's called replacement cost. In other words, it's more of a construction cost versus market value.
Right.
So they're saying if we had to rebuild this same home just like it is and have a custom builder come in here and build it, how much would it take us to rebuild it?
Right.
So obviously that number is based on square footage and some of those type of things. But, loan amount is often driven by like market value, right? So the same house buying in Frisco is probably not the same price as buying it in DeSoto.
Exactly.
So obviously that's a different market value, but hypothetically, construction-wise, they should be fairly similar.
Pretty much. And again, like you said, basically we're not insuring the land. The land is always going to be there, even if the house were to be completely destroyed, burned down, whatever, God forbid. But the land's going to be there.
That's right.
So there's not an insurance company on the planet that I can think of that will insure the land.
That's right.
So,
That's right.
And so when we've had some pushback like that on some of the lenders, and believe it or not, it's just some of them just don't know. And a lot of it comes from the underwriters. Underwriter, gets to go in and they're like, okay, we have to have this. But we actually do have what they call a Consumer Bill of Rights for insurance, right? And so on number 4, the actual real answer says that a lender cannot require you to purchase insurance on your property in an amount that exceeds the replacement cost of the dwelling and its contents as a condition of financing a residential mortgage or providing other financial arrangements for the property, regardless of the amount of the mortgage or other financial arrangements. In determining the replacement cost, like you said, replacement cost of the dwelling, a lender cannot include the fair market value of the land on which the dwelling is located.
Yeah, so Texas Department of Insurance puts that with pretty much every policy that you see.
Right.
So if you have a homeowner's policy, if you pull it up, you're going to see this Consumer Bill of Rights, and that's number 4 on one of the pages.
Yeah, and like I said, I just had this come up this past week with the lender, and I just basically had to remind them, send them the Consumer Bill of Rights, highlighted number 4. It's usually not an issue. But there's the answer to the question a lot of people have asked, because they kind of get freaked out, because when we run the quote, we know what we're doing as far as not insuring the land and why the number is where it's at, and we're comfortable with it. We sell the quote to the policyholder, and it's a certain amount. Well, obviously, if you raise the dwelling amount, if you can, in most cases, you can only raise it about 20% over the replacement cost. It's going to increase the premium, right?
It not only
in most
increases
cases,
premium,
your deductibles.
it also increases your deductibles, right?
Yeah,
So we want to keep that number as low as we can for the most part.
Sure.
We don't want to insure for under what the replacement cost is.
Exactly.
But we do want to keep it as exact as we can, not only to protect our consumer from paying too much, but also to try to keep those deductibles as low as we can.
Right. And I will tell you, I have had in a few small instances where the replacement cost is actually over the loan amount by a little bit.
It does happen.
And it happens from time to time. And like Cody said, we have to insure it for the replacement cost. We can't go under. We can go up a little bit in most cases, but we can't go under. That number is pretty solid as far as the replacement cost, because you got to figure with the cost of goods going up and material and labors and all that kind of stuff, it's crazy right now, right? It's crazy. So we want to make sure you're insured properly. So there's the answer to that question. We appreciate you watching the videos each and every week. Share them with your friends and family. And if you need any help, reach out to us. You can call me at 469-585-6012 or jim.ensinia at goosehead.com. Thanks for watching, and we'll see you next week.